Bitcoin has experienced a bloodbath lately, and it seems that we may be forming a bottom. In this video, I'll show you my thought process and why I'm going all in and the data to back it up. If you don't know, my name is Joey. I'm not a financial advisor. I'm just a crypto enthusiast who had the privilege of getting into the crypto industry about 10 years ago. With that said, welcome to Da Vinci Trades, and let's get down to business. Now, one of the main reasons the crypto market and the stock market have been crashing is because the Federal Reserve has been dramatically increasing interest rates in order to combat the inflation caused by the trillions of dollars that it's printed to stimulate the economy. We saw the biggest interest rate hike since 2020 at a half a basis point. Now, with inflation still hovering around 8%, it's safe to assume that the Fed will be increasing rates further. With that said, we can utilize this information and apply it to our predictions on what the rest of the year may look like for crypto and stocks. The blue line on this chart shows the percentage of inflation, and the red line shows the rates at which the Federal Reserve has increased interest rates to combat inflation. And as you can see, inflation hasn't been this high since the 1980s. You can also see that during the 1980s, interest rates were increased to almost 20% to shut down a 10% inflation rate. Today, our inflation rate is very high in comparison to the interest rates on the graph. So we can safely assume again that the Fed will be increasing rates extensively, and the downside of this is the possibility of us going into a recession. So this is the data that you will want to pay close attention to as we progress into the end of the year and into 2023. This same data is a good indicator that markets in general haven't found a bottom yet and may present an opportunity for investors like you and me to get in at a very low price before the next run. Now, with that said, I want you to take a look at some charts to show you why I'm planning to go all in on Bitcoin in the near future. I'll be showing you an in-depth analysis by Will Clemente on why he's planning to do the same. Will posted on Twitter that he believes Bitcoin is very close to a multi-generational bottom where he plans to allocate all of his dry powder for his grandchildren's grandchildren. He based this plan off of this data. We are very close to Bitcoin's realized price, which is the aggregated cost basis of investors. Bitcoin's realized price currently sits at $24,000 and Bitcoin's current price is around $30,000. The realized price is calculated by dividing the value of all Bitcoin divided by the number of Bitcoins in circulation. This is the average cost basis or purchase price at which all Bitcoins were purchased. The significance of this chart is that it's been used historically by investors to predict Bitcoin's bottom. Now, keep in mind that this is only one metric and we can always sit at or underneath the realized price for an extended period of time. It doesn't necessarily mean we're going to see an aggressive bounce to the upside immediately. Now, this next chart shows the green bottom zone for Bitcoin. And with that previous data in mind, the realized price data, the market price to realized price ratio for Bitcoin is very close to the green bottom zone. And as you can see, every time we hit that green bottom zone, we've seen a reversal. Now, once more, it doesn't mean we're going to see an aggressive bounce to the upside immediately. We can sit at or under the green zone for some time before we see a decent move, which gives us the opportunity to accumulate before takeoff. And real quick, guys, I'll be making a video every week utilizing these charts, so subscribe to our channel so you don't miss them. Will also posted dormancy flows for Bitcoin, stating that we've been in a buy zone for the last few months and is now approaching levels that previously set generational bottoms. As you can see, every time we dipped into this level, once again, we've seen a decent move to the upside. Taking a look at the reserve risk, which shows the confidence of Bitcoin holders relative to the price, we can see again that we are in the buy zone. This means that current holders of Bitcoin are super confident in the price action right now and are holding on to their coins. Moving forward to the 200-week moving average, we are very close to tapping that moving average, which on the technical side may indicate a potential move to the upside based on the price movement that we've seen in the past. So based on the aggregation of these metrics and price levels, the bottom is most likely in the low to mid 20,000. Will goes on to question whether or not buying now or waiting to snipe the bottom will even matter in 2 years. Probably not, but he said he's going to try. So my plan, guys, is to circle back to these charts consistently. Every week I'll be going over this data, and as long as they indicate that we're in the buy zones, I'm going to keep accumulating. I'm going to keep buying the dip. I'm going to keep cost averaging down. Now, if this makes sense, let me know. I'd like to pick your brains a little bit with this data. Again, don't forget to subscribe to the channel so you don't miss our next video going over these charts. I hope to see you guys soon. Thank you for visiting. We'll see you next time on Da Vinci Trades.